Here's something that will genuinely rewrite the way you think about the country you live in. For the first 73 years of America's existence, there was no Internal Revenue Service. No federal tax collectors knocking on your door. No agents auditing your books. No bureaucratic machinery designed to extract a percentage of your earnings and funnel it back to Washington. And yet somehow, the federal government managed to pay its soldiers, build its navy, service its debts, purchase Louisiana, fight multiple wars, and expand from a fragile collection of 13 coastal states into a continental power stretching from the Atlantic to the Pacific. So the question isn't just historically interesting. It's actually kind of urgent. Who was collecting taxes before the IRS existed? How did money flow from ordinary Americans into federal coffers without any centralized enforcement agency? And what does the answer reveal about the profound and largely forgotten transformation that happened to this country in 1862? Because here's what most people don't realize. The absence of the IRS wasn't an oversight. It wasn't a gap waiting to be filled. It was the intended design. The founders built a fiscal system so deliberately different from what we have today that understanding it is almost like studying a foreign civilization. A civilization that operated on completely different assumptions about the relationship between citizens and their government. And the story of how that system worked, who actually collected the money, how they did it, and why it eventually collapsed under the pressure of the most destructive war in American history, that story is one of the most revealing and least told chapters in the American founding. So let me take you back to the very beginning. Back to a moment when the new United States government had almost no money, no collection infrastructure, and a population that was pathologically allergic to being taxed. When the Constitution was ratified in 1788, the founders faced a problem they had already experienced in the most painful way possible. Under the Articles of Confederation, the national government had possessed no independent taxing authority whatsoever. It could request money from the individual states, which sounds reasonable until you understand that the states routinely, almost cheerfully, ignored those requests. The central government was functionally a beggar wearing a crown. The accumulated debt from the Revolutionary War stood at roughly $79 million combined between federal and state obligations. Creditors in France and the Netherlands who had bankrolled the revolution were growing impatient. The government couldn't pay its soldiers. It couldn't fund a functioning military. Foreign powers looked at the young republic with barely concealed contempt. So the new Constitution explicitly granted Congress the power to lay and collect taxes, duties, imposts, and excises. Real authority. Real teeth. But here's the critical detail that most people completely overlook. The founders were terrified of the very power they were creating. They had just spent 8 years fighting a revolution against a government that taxed them without representation. The last thing they wanted was to build a new government with the unchecked ability to reach directly into the lives and pockets of ordinary citizens. So they constructed two crucial limitations. First, Article 1, Section 9 mandated that any direct tax had to be apportioned among the states according to population. This made direct taxation on individuals almost impossibly cumbersome and deeply impractical. Second, and this is the detail that shaped the next 73 years of American history, the founders intentionally designed the tax system to operate at the border, not inside the country. Revenue would be collected at the edge of the nation, not inside the homes and businesses of its citizens. This wasn't accidental. It was architectural. And to execute it, the government created something called the United States Customs Service. If you want to subscribe to a channel that actually goes this deep on the hidden machinery of American history, the systems, the structures, and the power dynamics that most textbooks completely ignore, hit that subscribe button right now. Because this is exactly the kind of story we tell here every single week. The Customs Service was established by an act of Congress on July 31, 1789, barely 3 months after George Washington took office. It was among the very first agencies of the new federal government. Before there was a standing army of any size. Before there was a functioning court system. Before there was almost anything else recognizable as a modern government institution, there was a network of customs collectors positioned at American ports. And the structure was elegant in its simplicity. Congress established a series of customs districts, each centered on a major port of entry. Boston, New York, Philadelphia, Baltimore, Charleston, Savannah. These were the financial arteries of the early republic, the points through which imported goods flowed from Europe and the Caribbean into American markets. Each district had a collector of customs appointed by the president and confirmed by the Senate. This was not a minor position. In cities like New York, The collector of the port was one of the most powerful and lucrative federal jobs in existence. The collector received a salary, but more importantly, he received a percentage of the duties he collected, a commission structure that created powerful personal incentives to be thorough. And thorough they were. Every ship that entered a customs district was required to present its manifest, a detailed list of its cargo, to the customs collector. The collector would assess the duties owed based on the tariff schedule established by Congress. The importer would pay, and the money would flow directly into federal coffers. The genius of this system was that it required almost no enforcement inside the country. You didn't need agents fanning out across farms and villages. You didn't need a massive bureaucracy. You just needed men at a relatively small number of harbors with the authority to stop ships and check their cargo. The geography of trade did the enforcement work for you. By 1800, there were 81 customs districts operating across the United States. The Customs Service employed several hundred people, collectors, naval officers, surveyors, inspectors, and boatmen, spread across coastal and river port locations. And for the first decades of the Republic, this modest workforce generated the overwhelming majority of federal revenue. From 1790 to 1860, customs duties accounted for roughly 90% of all federal income. In peak years, the figure climbed to 95%. The entire machinery of the early American government, the Army, the Navy, the debt repayments, the territorial expansion, was funded almost entirely by men standing at docks with ledger books. But the Customs Service wasn't the only pre-IRS collection mechanism. Because the founders had a second enormous financial asset sitting right in front of them, one that no European power could match. They had land. Incomprehensible amounts of it. As the young nation expanded westward through purchase, treaty, and conquest, the federal government found itself holding hundreds of millions of acres of public domain. And selling that land became a significant source of federal income. The General Land Office, established in 1812 within the Treasury Department, administered the sale of federal public land. A network of local land offices spread across the frontier, each staffed by a register and a receiver. The register kept the records. The receiver collected the money. These land office receivers were, in their own way, tax collectors. They didn't call it taxation. The transaction was framed as a sale. But the effect was the same, money flowing from citizens into federal hands in exchange for access to the national domain. Land revenues were not trivial. On average, they represented roughly 14% of federal income between 1790 and 1860. In boom years, particularly during the land rushes of the 1830s when the forced removal of Native American tribes opened vast new territories, land sales spiked dramatically. In 1836 alone, over 20 million acres were sold, generating a flood of revenue that briefly erased the entire national debt. Under President Andrew Jackson in 1835, the United States accomplished something that has never been repeated before or since. The national debt was paid off entirely. Not reduced, not restructured, eliminated. Every cent that was owed paid in full. The land receivers and customs collectors had together achieved what seemed financially impossible. Now, the customs and land revenue system worked extraordinarily well when the government's needs were modest and the economy was growing. But it had an Achilles heel. It was dependent on trade. And trade was volatile. Wars, diplomatic disputes, recessions, and embargoes could all collapse import volumes overnight, and with them, the customs revenue that kept the government functioning. This vulnerability forced the government, at several critical moments, to reach inside the country for revenue in ways that proved deeply controversial. The first attempt came in 1791 when Treasury Secretary Alexander Hamilton proposed an excise tax on domestically distilled whiskey. On paper, it was reasonable, a modest levy on spirits to help retire the national debt. In practice, it detonated a political crisis. On the western frontier of Pennsylvania, whiskey was not a luxury. It was currency. Farmers who couldn't afford to ship raw grain over the Appalachian Mountains distilled it into whiskey, which was lighter, more portable, and could be traded for goods and services. When federal excise tax collectors ventured into western Pennsylvania to enforce Hamilton's new law, they were met with violence. Collectors were tarred and feathered. Homes were burned. By the summer of 1794, nearly 7,000 armed rebels had gathered near Pittsburgh. But here's the part that matters most for our story. To collect this internal excise tax, the government had to create something it had never needed before: internal revenue collectors operating inside the country rather than at the border. Supervisors of revenue were appointed for each state. Local collectors were assigned to districts within each state. This was, in embryonic form, the infrastructure that would later become the IRS. But the political backlash was so severe that Thomas Jefferson, riding the wave of anti-tax sentiment, swept into the presidency in 1800 and immediately repealed every single internal tax. Every one of them, gone. The internal collectors lost their purpose, and the government retreated back to the customs house. The same cycle repeated after the War of 1812. Emergency internal taxes were imposed, collectors were appointed, revenues were collected, and then the taxes were repealed the moment the crisis passed and the collectors were sent home. The pattern revealed something fundamental about early American political culture. Citizens would tolerate being taxed at the border, where the levy was invisible, baked into the price of imported goods. They would not tolerate being taxed inside their own country, where the hand of government reached directly into their daily lives. For 73 years, the cycle held. Tariffs at the border, land sales in the offices, emergency internal taxes in wartime, repealed in peace. No permanent internal revenue apparatus. No sustained federal presence in the financial lives of ordinary Americans. Then came the Civil War, and with it, a fiscal catastrophe that destroyed the old system permanently. The Union War effort cost approximately $5.2 billion, an astronomical figure that dwarfed anything the federal government had ever contemplated. Before the war, Washington was spending roughly $172,000 per day. Within months of the first shots at Fort Sumter, the War Department alone was burning through $1 million a day. By the war's end, expenditure had reached $80 million a month. Tariff revenues, dependent on international trade, plummeted as the war disrupted shipping. The government needed money on a scale that made the old customs and land sales system laughably inadequate. So Congress did something that would have horrified the founders. In July of 1862, it passed the Revenue Act, which imposed a graduated income tax on American citizens, and to collect it, created an entirely new federal agency, the Office of the Commissioner of Internal Revenue. This was the direct institutional ancestor of what would become the Internal Revenue Service. The commissioner started with a staff of 3 clerks. Within months, the agency had grown to nearly 4,000 employees, assessors and collectors spread across the country, empowered to reach inside the financial lives of ordinary Americans in ways that no federal agency had ever done before. And here is the detail that changes how you see everything. The men who staffed this new agency weren't customs collectors watching ships at the dock. They weren't land office receivers processing frontier purchases. They were internal revenue agents operating inside the country, inside communities, knocking on doors, examining records, assessing income. The border had been crossed. Not the physical border, the philosophical one. For the first time in American history, the federal government had built permanent machinery designed to collect money directly from citizens based on what they earned, not what they imported. The architecture the founders had so carefully constructed to prevent this was gone. And it was never coming back. The income tax itself was repealed in 1872, 7 years after the war ended. But the Bureau of Internal Revenue that collected it was not. It survived, continuing to collect excise taxes on alcohol and tobacco, waiting quietly for the moment when income taxation would return. That moment came in 1913 with the ratification of the 16th Amendment, and when it did, the infrastructure was already in place. The Bureau of Internal Revenue became the Internal Revenue Service in 1953. And the rest is the government that reaches into your paycheck every single week. Step back and consider what the pre-1862 system actually represented. Because it wasn't just a different collection mechanism. It was a different theory of government. When taxes were collected at the border by customs officers, the government existed at a distance. You could live your entire life without ever interacting with a federal revenue official. The state was present, but it was present at the edges, at the ports, at the land offices, not inside your home, your business, or your paycheck. The men who collected taxes before 1862 were, in a very real sense, gatekeepers rather than pursuers. They waited at points of entry. They assessed what came through. They did not come looking for you. The IRS changed that relationship fundamentally. Not all at once and not entirely by design. But the institution created in 1862 out of wartime desperation introduced a new principle into American life. The principle that the federal government had not just the right but the permanent institutional capacity to assess and collect money from citizens based on their individual financial activity. Whether that transformation was necessary, whether it was justified by the services it eventually funded, Social Security, Medicare, the interstate highway system, the public institutions that define modern American life, is a question that depends entirely on what you believe government is for. But here's what no one can dispute. The men at the docks were replaced by the men at the door. And understanding that replacement, understanding who collected taxes before the IRS existed and why the IRS had to be invented, tells you more about the nature of American government than almost any civics lesson you were ever taught. If this shifted the way you think about how power actually works in America, subscribe to the channel right now. We dig into exactly these kinds of hidden histories, the systems and structures that shape the country you live in but that almost nobody ever explains. There is another video coming that pulls on this thread even further, and you will not want to miss it.